Well, I'm joined now by Jeremy Batstone, an economist at Stockbrokers, Charles Stanley, and Dr. David Stubbs, a global market strategist at JP Morgan Asset Management. Gentlemen, it's good to see you both. Thanks for coming in. David, if I could start with you. Warnings of trouble ahead from the Chancellor. Yet in his autumn statement, a matter of weeks ago, he was cock-a-hoop about the state of public finances. Was he deluded then? What's happened?
Well, I think that, like all chancellors, like to sound optimistic when they're at the dispatch box, certainly. I think that we can't get too pessimistic about the state of the UK economy. Unemployment is falling. We do have economic growth, but the challenges that the globe is facing are brought into stark relief by the events today. You see China's stock market falling. You see their currency potentially much more important, also devaluing, and again the price of oil and commodities falling as well. There is turbulence in the global economy, and the Chancellor is right to warn about it.
Jeremy, clearly China is playing a big influence and clearly influential, second biggest economy on the planet, and as a result their slowdown is affecting everybody else.
Yes, that's right. The operative word being contagion, and importantly, of course, trade is a major factor. In actual fact, according to the Office for National Statistics, China accounts for something like 7.5% of UK imports and about 3% of UK exports. Now, that doesn't sound very much, but it has grown very significantly over the course of the past 10 years, in addition to which, as we heard in the report, there is foreign direct investment in the UK. The Prime Minister has been on a charm offensive with his team to China. There is the highly controversial nuclear build programme, of course. All of these things are hugely important to the UK economy.
And there is always scepticism in some quarters looking at the Chinese figures when they put them out as regards the state of their economy, but they have devalued the yuan, the renminbi. That is a clear indication they're particularly worried. But could things be actually worse than they are on paper at the moment?
All you say is entirely true. It's sometimes said in the financial markets that it's not what you know that counts, but what you don't know. And pretty much everybody understands that the Chinese economy is not performing as well as the official data released by the Chinese authorities would have us to believe. China is almost certainly not growing at 7% a year. It's probably growing at maybe 3.5% a year. In order to participate in an economic transition, which was part of the latest plan, the currency is being devalued to try and support China's exports to make that transition as smooth as possible. And it's the weakness in the currency, just as we saw back in August, that is roiling the world's financial markets.
David, I suspect when most people hear me on the telly talk about the economy, it could be in trouble because the Chancellor says so, the first thing that springs to mind is interest rates. What's going to happen to their mortgage, to their loans, to their credit cards? Given the suggestion that there is going to be a global economic slowdown because of the situation in China and on a lot of other factors as well, are we looking at a delay in the possible rise in interest rates, or could we actually see an increase for perverse reasons?
Yeah, I think that it's quite contradictory to talk about these two things in the same sentence as clear and present risks. You know, as Jeremy just said, you know, trade is a big linkage, but of course that flows through into our inflation. Absolutely, the biggest influence China is going to have with lower producer prices that we're seeing there, a lower currency, and falling global commodities is dragging our inflation down. It absolutely pushes the Bank of England back in terms of its plans to raise interest rates. I don't think people should fear that raise if it does happen at some point later this year, maybe next year, because the Bank of England is not going to pull the trigger unless the domestic economy is a lot stronger than it is now, and that this international turbulence that we've seen has calmed down a bit.
But we are talking about, in general, global issues here, and that's certainly what the Chancellor has been pointing to. But Kamal Ahmed, in his report, he talked about weak manufacturing data here. He talked about, you know, lack of productivity, low productivity in this country. How can we get our act together to help deal with these crises?
Absolutely. This is the real agenda and what the Chancellor and the government really should be focusing on. Everyone understands that gradual reduction in the budget deficit is important at this point in the cycle. But our big miss is on our ability to provide infrastructure, our failure to improve and simplify and make our tax system more competitive as well, and of course the skills gap we see in parts of our education as well. Those are the long-term drivers of productivity. Productivity is a long-term driver of national income. That's where we should be focused on.
OK, let's go back to China then. What do you think the Chinese can do to improve the situation over there and stop them hurting us?
Very good point. Well, I take the view that the Chinese economy is not a basket case. I think it's going through one of its periodic cyclical slowdowns. However, because the Chinese economy has become so indebted in the pursuit of growth before, this means that the slowdown this time is going to be rather greater than cyclical slowdowns that we've seen in the past. Nonetheless, I do believe that China has the capacity to help itself. Of course, the Chinese monetary authorities could even cut Chinese interest rates, which is a luxury not afforded many other countries in the world. So probably too early to write the Chinese economy off completely.
Indeed, and let's hope we never do that, bearing in mind they're the second biggest on the planet. All right, Jeremy Batstone, David Stubbs, it's been great having you in. Thanks for joining.